How does executive leadership promote compliance?
In many ways, the reason we have the compliance issues in the regulatory environment we're in is because we failed to lead. And as we failed to show up and be in a strong way. And it's one of those things, Gabe a close friend, we've known each other for many, many years, we worked together. He made his statement, one of his opening statements was, we don't want to get into politics, this isn't a political event. I appreciate that. There's no one that dislikes conflict as much any more than I do, but I think we have been absent from the discussion. And we need to get back in and involved in a leadership way, talking about these issues. And so I started studying the topic of leadership, and just because I wanted to bone up on it and get knowledgeable on it. And it's just astounding to me as a result of writing the article, some of the feedback I'm getting. And so the whole purpose is just to challenge this room, challenge the people that you're working with, your organizations, to step up without becoming political, engage in the political process, engage in the political thing. If we don't, we're going to be facing more and more compliance. We've got to turn the tide on this, or guys, it's going to help hurt our economy, it hurt our country, and it's going to hurt our business and all that we're trying to do here. And
How are lenders coping with compliance environment?
I think lenders right now did a good job of trying to do what I call plug it into the process, right? So for the last couple of years, we've had MDIA, we've had good faith estimates, all that was brought up. And they've kind of plugged it in. The thing that I am trying to make sure people think about right now is before QM and QRM start turning the corner, we have to cope with that. Now's the time to reassess your process. So people are coping with kind of, here was my process, I plugged in these, a lot of times just people instead of a technology solution, and their process is a mess. I mean, it's in and out, back and forth, you know, way too many touches on a file to try and get it to close. I'm saying now is the time to, you know, have a meeting, get your key executive officers out of the office for a day and draw on a board what your process looks like today. And then stand back and look at it and go, am I really happy with that? You know, and I'm going to bet, right, we do this string thing in a demonstration in a class, in a speaking thing Dave and I do on what is the right level process. And when you connect people with a string, you realize, wow, this is a mess. No wonder my customers aren't happy by the time we get to closing. So the biggest issue I think right now is I think a lot of customers grasp it. They got the compliance, stuff's getting out on time. They managed to get through integrating their technology, but they don't have a smooth process now and need to revisit it. So that to me is the number one thing to do right now while we've got a little window here before we get hit with the next wave.
How can vendors support their vendor clients in this area?
I think the most important thing that we have to do as vendors is really be collaborative in our processes, just like Allison and Dave have already spoken about, is, you know, really getting into a room with them and talk to them about their process and document it for them. But I will tell you that I don't think that they have the 100% solution, because they get so deep and mired in their processes that they really can't step outside of them and find out what really is best for their workflow, what really is the most efficient process that they need to be doing. And I think Allison mentioned it also, is the fact that all the touches that we have going on in the loan file today is just ridiculous. It's more efficient to just really get all your verifications done, and then your underwriter needs to look at it and make the decision. Don't waste an underwriter's time on self-professed information that basically is a lot of times, and one of our weaknesses, not worth the paper that it's written on. So I think it's most important that we really collaborate with our lender partners, but we also need to continually think outside the box and be more creative than they ever thought of being about their process.
Are there any positives associated with new disclosure regulations?
In the industry, as far as compliance goes, it's been the perfect opportunity to really force from a paper process to a paperless process. And we've seen great adoption in some segments of the industry and very little adoption in other segments of the industry. To your point, the disclosure process today, if you are not doing e-delivery and e-signatures on disclosures, you're way behind the 8 ball, because out there today, probably 70% of everyone is doing it through an electronic process, because with compliance, there's no audit trail when you're mailing something out and, within 2 days, you've got to redisclose. All of that is tracked through audit trails in any kind of e-delivery or e-signature solution that is out there today. So we've seen great compliance adoption and improvements in that segment. And so it's kind of in your organization, if you're getting that service from someone that you're outsourcing it to, or you've brought it in-house, look at how that's improved that one tiny segment of your business and how you can replicate that in other parts of your business. And that's what we're working with our customers today on. Hey, it's really worked great here. How can we now replicate that in other areas of your business?
What happens after QM is defined?
No matter what the rule or regulation that comes out, no matter what it says, you have to have a system in place that can readily tell you what you have in your pipeline and model your process around that new regulation. And it has to be quick. It cannot be reprogramming of systems. It cannot be, hey, what loans do we have that are affected by this? You have to have data, instantaneous data, know what is in your pipeline, and be able to change your process in a matter of hours, not weeks or months or even quarters or years. So to me, I don't get caught up into, because I can't really change what the regulations are. I get into, hey, we have technology systems, and you guys all, there are a lot of vendors out there that have technology systems that can help you basically know what you have and what your process should be, and be able to remodel that process quickly to affect the change within the organization. So.
The other point regarding QRM, I think one of the arguments, or a lot of the argument that is leading towards QRM likely being withdrawn and rewritten, is reliance on data. Major lenders, Quicken was a big lender, but both B of A, Wells, and also some smaller institutions that had really good data capture systems were able to go back to Congress and go back to the regulators and say, do you understand that over the last 4 years, if you were to apply the QRM standard, over 75% of the loans would not have been made? Is that what you're trying to do? And I think everyone at that point kind of said, oh, maybe not, we should rethink that.